dog status, now I'm a big dog vet. I pull up on the block in a big Corvette. Yeah, ride around the city with a stick all black.
Good morning, everybody. You're watching SmallCapSteve Live. I am SmallCapSteve. Markets seem a little bit mixed this morning. Gold and silver are up. The 10-year yield is down. Lumber is going up again. Oil's up. Johnson & Johnson announced that there is an issue with blood clotting. So there's been a pause. Perhaps that's going to slow down some of the vaccine rollout. Something worth keeping an eye on. We got no guests on the show today. This is going to be me and Jay talking small caps. Facebook announced that they're going to do video speed dating. I want to get into that. Taco Bell is going to launch their first digital store in New York. I want to hear about that. I'm a big Taco Bell fan. So buckle up. Let's get started.
Big dog status, now I'm a big dog vet. I pull up on the block.
I'm joined today with the great Jay Lutz. Jason Lutz, how do you doots?
Oh, I'm not too bad. It's been a hectic morning to say the least, but not a lot going out there in small cap.
That's always the intro. It's always been a hectic morning to say the least. That's the news.
What?
Right?
You want to know my morning? So I get up at my first alarm goes off at 4:30. I sit down and I bust my ass until about a half hour after market open. And then right now, because we're training now 3 different writers who should make their debut in the coming weeks, I sit down and have like an hour conference call with them. And I still got to hop in the shower and make it to the show nice and clean for SmallCapSteve. And I mean, again, I'm stuck with my first coffee of the day at 12 o'clock. So it's hectic by all accounts.
Yeah, well, look, you're doing some good stuff there. So, look, but before I didn't even know that we'd get into this morning, but I see Tesla's having a nice little morning here.
You know why? It's probably because Canaccord upgraded them.
Yeah, but that news came out yesterday, but there's still some.
There's a market delay, man. The market has to digest the news, and now they go, you know what? The likes of Matt Bottomley and his fellow analysts have gone, oh wow. This thing needs to be double our prior price target, and now people are like, okay, I see it. I see the light.
Yeah, well, it's
we pick on Canaccord a lot, and it's just because they win the numbers game up here in Canada.
Well, so let me pull this up for you here. Tesla Canaccord doubles price target to $1,071. So Tesla Canaccord doubles price target. On Monday, one of the most bearish Tesla analysts flipped bullish and more than doubled their 12-month price target. Canaccord Genuity raised its target from $419 to $1,071 and raised its rating from hold to buy, making it the second highest price target on the street. Tesla currently has 37 analysts covering their company with a weighted 12-month price target of $651.26. This is up slightly from last month, which was only $634. Moving down, Jed Dorsheimer, Canaccord's analyst, who, by the way, I was talking with somebody who's a good friend of Jed's. I'm hoping that we can have Jed on the show sometime to talk about Tesla, something I'm sure that you would love, Jay. Says that their price target is based on 63 times their 2024 EV to EBITDA multiple.
Isn't that ridiculous? 63 times is one thing, and then 20 to 24?
Oh boy!
Is what
63 times their 2024 EV to EBITDA multiple, a whole 300% higher than the peer group. He concedes that this premium is very high, but writes, we also believe Tesla holds a several-year lead and is now expanding aggressively into storage, and thus feel our multiple is warranted.
So I just have to ask you, Steve, do you feel like Tesla has a multi-year lead over Iguana in terms of energy storage?
So that's a good question, and to be
and I presented it as a dick, but it's a genuine question because
I don't. I don't think that they do.
I truly think Tesla has zero lead. The only lead they have is in name recognition.
Yeah, and it's interesting because the analyst who wrote this, I know, is friends with somebody who's a large shareholder in Iguana. I'm sure that he's heard about this little tiny micro cap from Calgary, Alberta before. And look, to me, what I find interesting about it, and I'm sorry, I don't want to turn this into a talk about Iguana Technologies, a name that I'm tremendously long, traded 13 million shares yesterday, hearing that there was a cross. What I have to say, though, is to me, this just talks about how big the residential energy storage market's going to be. I think it's going to be huge. I think that there are a handful of names you can play to get exposure to the space. And look, Tesla is one of them. But I don't know, man. Like this is let's repeat that just so that I can comprehend that. He concedes that this premium is very high, but writes, we also believe that Tesla holds a several-year lead and is now expanding aggressively into storage, and thus feel our multiple is warranted. So let's put it this way. If you're doubling, right? Let me go back to Tesla's chart here. Market cap of 709 million. Okay, so yesterday was what, like 709 billion.
So 709. So basically, that would put them over $1 trillion market cap.
And largely on residential storage. And here I got this stupid little micro cap out of Canada I won't shut up about. The trades at $130 million market cap that I believe, technology-wise, has the pole position.
Yeah, I mean, don't get me wrong. I understand why people are skeptical of what we're saying right now. When we say the words that a microcap is ahead of Tesla in terms of home battery storage, I understand why people go, what? Everyone thinks Tesla has this huge R&D budget. They don't. And like in terms of energy products, they really aren't that great. We see all kinds of horror stories, especially in terms of the install, where houses are effectively non-livable because installers have structurally destroyed them while installing Tesla systems, and trying to get things fixed is impossible. But literally, like everyone knows I'm a bear on Tesla.
Which, by the way, Iguana offers remote diagnostics so that they can actually have somebody who can remotely assess what your battery needs without actually showing up on site. But this is an article about Tesla.
This is what you and I like about small caps, is there's always going to be those small handful of companies that just are undiscovered, right? And to me, that's what an Iguana is.
I actually chimed in on a message board yesterday about. I'm sorry, I'm talking so much about Iguana. I don't want this to be a show where I just talk about one particular small cap name all the time. But it is a large holding for me, so I'm going to talk about it. Somebody was comparing them to the valuation of some of these green energy stocks that have, $100, $200, $300 million market caps that literally have nothing. Like if you actually had somebody who understood the space of which they're competing in, you'd understand that there isn't a whole lot there. But one thing I like about some of these names that have been around forever, that have struggled, that have sloppy share structures, is that if you are a retail investor, that's where you're going to actually be able to get in on the cheap paper, because there's cheap paper available. In fact, a lot of that paper people paid much higher prices for. Whereas like if you're looking at a new issuer that just sort of came out in the last like 12 months, we can show you how to break down those share prices. You want me to bring you one? I'll do it right now, guys. I'm probably gonna get some emails for this. I don't care. They're a company called AC/DC. Can I talk about AC/DC, Jordan, or you think that I'm going a little bit?
Are we talking about the band? Let's talk about it. Back in Black, great album.
Yeah. Check me out. I'm not finding it on CDAR here. Let me try to pull it up.
You're not finding it?
What's the actual name of the company here? AC/DC.
Sorry.
Extreme Vehicle Battery Technologies.
Battery technology.
Oh, look at all those buzzwords that go into their title.
Extreme.
It's extreme, dude. Look at all those news releases. Whew. It's a lot of news releases. Okay. Are you able to see my screen right now?
Well, that I can, good buddy.
So this is my favorite part of CDAR coming on, typing in the code. Okay, so you guys can see this here. So this is their most recent financials. Now, what I want.
Oh, I see what they did. Extreme vehicle battery, so they can put EV battery technologies. That's terrible.
But what I suggest shareholders look at when they look at this company is this line right here. 232 million shares issued for $1.435 million. What does that tell us, Jay? What was the average price paid with you know, doing the math off the top of your head? That's less than a penny, right? Now let me go and pull up this chart for you guys.
What was the number? I have to see what this actually is, and I always put these
trading at 31.5 cents. So here's the numbers. 200. So guys,
1,435,123 divided by 232,920 123. It feels like someone overpaid heavily there. They paid 0.6 cents per share.
0.6 cents per share, so not even a full penny. And then we look here at this chart, it's trading at 32 cents. So you're getting over a 32 bagger. And I'm being
that's nearly like a 60 bagger.
It's a 60 bagger. A 60 bagger if you're able to sell shares here. And this is what it looks like, guys. If you guys want to invest in a new issuer, open market, you better do your homework on something like this. And again, just go to CDAR, look at the statement of equity. It tells you.
Man, I would love to have just 1 million of those shares.
Yeah. But, you know, that is what it is. What I'm saying, and my point is, it's not to shit all over these guys. Who knows? Maybe their technology turns out to be great, and it actually makes sense here. Call me a skeptic, but it could. Crazier things have happened. The bigger point I'm getting at is that's what a new issue looks like. The vast majority of the shares, like 1/60th of today's price, and on a new issue, this company's relatively new. Whereas sometimes there's something to be said for a company that's been failing for 20 years, like Iguana. That you go and you look at a lot of these shares that they've issued in the past. There's actually been a ton of down rounds once you actually like break down the share structure and realize that they've had to do a bunch of reverse splits. So what I'm getting at here is that it may look sloppy and it may have look at this. This company here that does not, to my knowledge, Itochu is not an investor. They don't have anybody like Fidelity in, which Iguana has both. $108 million market cap. Now I pull up EGT. $111 million market cap. So one of these is getting credible institutional investors. In case you don't know who Itochu is, they're a Japanese trading house who Warren Buffett discloses one of his largest holdings. Fidelity, I think we know who they are. They both wrote pretty big checks into this deal. So you're getting in at a price around the same price that these guys got in. So to me, that is much more interesting than looking at a new issue. If I'm looking at a new issue on the TSX Venture or the CSE, I suggest you guys look at these balance sheets, cash flow statements, income statements, and see what you're investing in. Because a lot of these, and I was talking to a guy this morning who's like a well-known deal guy in Canada, and I was telling him like, we're cautious over what clients we take on at the deep dive to give coverage to. Who do we want to talk about on our website and bring to our audience? And he goes, well, you must be talking to all the wrong people because I don't see that many bad deals. And it was just like, well, have you ever like looked at what's on the TSX Venture and the CSE? Most of these things,
that many bad deals. I've got so many questions.
Yeah. Oh, well, according to him, they're not out there. And most of these things are just vehicles to transfer wealth from the deal guys, from the retail investors, which is you, the folks watching, the 107 live viewers we have right now, into the hands of the deal guys. That's and then they try to approach groups like us who are doing our thing on social media and say, hey guys, can you write about us? Can you tell your audience about us? And that's what it is. But look, we got to make a living, so that's fine. I'm okay with talking about some companies, but I'm going to damn well make sure that if I cover anything, I'm going to try to do it responsibly and make sure that I'm not covering anything that has a share structure that looks like that. You would have to have one heck of a CTO or technology or some kind of undiscovered asset to sell me on something that's got over 200 million shares issued at under a penny. That's a new issue.
Yeah, I don't know how is that even permitted, right? Like, that's probably the best question there is. Like, what one hell of a marketing campaign must have been behind it, because I don't know how else anyone would buy into that. I find it hilarious how it's got the same market cap as iguana. It tells me all I need to know about iguana in terms of where valuations sit relatively.
Well, to me, it's kind of a story of two tales, right? Like, story of two tales. I don't know if that makes sense. It's a tale.
The story of two tales, a tale of two stories.
Oh, God, I don't know. Again, my wife's throwing me off because she drinks more coffee than she used to, and I just don't have as much.
Just make a second pot of coffee, man.
Okay, so let's get into this story here on Facebook.
Yes, you wanted to talk about speed dating.
Speed dating. Look, I got a lot of single friends. I'm not single. Sorry, ladies, I'm taken.
You can hear them crying in the background.
But let's pull this off. I found this particularly interesting here. So Facebook is testing a speed dating app called Spark. And there's another story that I read this morning that I kind of actually want to get into that ties in perfectly with this of what a senator wants to do with M&A in America. We'll get into that in a second.
I just want to highlight the ads you have here again. I don't know what you click on, dude. I've got questions, but I'm going to leave it there.
Look at these ads. How do you not click on this? How do you not click on those ads? Okay, anyways. Facebook is testing a video speed dating app called Spark. The app, which requires a Facebook profile to create an account, is developed by the company's NPE team, Facebook's in-house group that works on experimental apps. You can view the Spark webpage here, where it describes the app as a video dating with kind people. And also,
people on Facebook? Have you ever scrolled Facebook?
It also promises no public profiles, no swiping, no DMs, and that it's free to use. The app will seemingly cycle people through speed video dates that last 4 minutes. It's I love this. I'm excited for some of my single friends.
So just explain this to me. There's no public profile, so you don't know a person's background. No swiping, whatever. That's just a common term for apps like this. No DM, so you can't talk to these people.
I love it. This is tech, Jojo. You don't get it. You don't get it. I do. I'm the millennial of the two of us. You're the one who gets up Sunday mornings at probably 7 a.m.
Sunday morning oldies start at 9 a.m. If that's what you're getting at.
This guy gets up at Sunday morning 9 a.m. puts on the AM radio and listens to oldies. He doesn't
9 to 12.
He's not like one of us cool guys. And so look, here's what I think is interesting. And we complain about these things, but they're part of what makes an app work, which is Twitter. What's the most common complaint about Twitter as a user?
As a user, there's no edit button.
100%. You gotta take things away, and that's what makes it kind of fun. Like, oh, you can't you can delete, but you can't edit. And they'll never change that because that's part of what makes Twitter unique. And be annoying if people could edit. If people because part of like the fun thing on Twitter, right? And I caught a little bit of heat yesterday because I put up that CC Pharma thing, and Craig Wiggums from the Canalys was like, you're confusing CC Pharma Denmark with CC Pharma Germany. Technically, he's right. I still think Africa is a pile of crap.
Still a pile of shit. Exactly.
And it was done to deceive shareholders into conflating top line pharmaceutical distribution revenue, which can be bought at a very cheap multiple, with cannabis revenue.
Hey, you could be like Organigram, who this morning reported like cost of sales of like 31 million on sales of 14 million. So
give Jordan 1 second to talk, and he will get right into the weeds of accounting notes of
exactly
cannabis companies. But here's what I'm getting at. It's like, look, I screwed up. I did confuse the two. Again, I don't care because that's besides my point. But I couldn't hit the edit button. I realized that after I put the tweet out, but I already got some likes. I got a couple of retweets. Like, whatever.
You know what I'd be okay with? A 30-second or 60-second window to edit, so that if it's spelling error, it's fine. But I see why you don't want to edit, because I mean, I could go back and edit something from 3 weeks ago where a bunch of people liked it and put something totally unrelated.
Yeah.
Right.
Okay, so let's get back into this article. I think that this is wildly fascinating stuff. So The Verge attempted to set up a profile and was put on a wait list, but the user sign-up flow suggests kindness is a key theme for the app. So it's not going to be like like some of these kids. They get on their video games and they start saying mean things to each other, and that's a real thing. I'm not being facetious on that one. When signing up, users have to type out what makes them a kind dater. Okay, that's kind of weird. I remember reading back in the day on Match.com, they could deem that you're not fit to be on their website. You're not fit to meet people on Match.com if you do the personality profile.
That's funny.
So in this case here, you got to explain why you're kind, which any true sociopath can do. In fact, who knows? Maybe there's a bit of a reverse psychology there. The better you do it, the less likely you are to get through. The app says these responses will be reviewed by a human. That's not sassy. That's by sassy. I'm referring to the SaaS model, which is everything's done robotically or through computer. So the app says these responses will be reviewed by a human at Spark. Before people can go on speed dates. Users also have to choose whether they want to date men, women, or non-binary, and then are asked if they are open to dating trans people. The Verge viewed a landing page for a dating event in Chicago that says 47 people have signed up to attend. What's unclear is how daters connect to the event, like whether they have to log into Spark through the web, or if they'll eventually be prompted to download an app. No app is live in the App Store or Google Play. Anyways, you know what I think the issue, a lot of stuff I like about this. There's a lot of stuff that I really like about this app, as knowing friends that are single that I'm rooting for, have had their challenges meeting people, and I've got a few friends like that. The thing I don't like about this app is you're still going to, like, if you talk to anybody who's like in their 30s or 40s that's single, there's one common theme that you hear, and that is
baggage.
No, it's time wasters. There's a lot of people who they just want to chat, and then you finally meet, and then they find some bullshit reason not to like it because they're lazy. They just want to sit around and like pretend that they're having romance over a keyboard, and maybe have a few phone conversations, but they don't really want to meet. So I do think, like a lot of my single friends, they don't listen to me. They don't listen to the guy who beat the odds. But I still think that if I were a single person in my 30s or 40s, I would go to a physical speed dating place, because I would suggest that if you did that, this is a hypothesis of mine, you would be less likely to meet somebody who is a time waster. And I still think that you're going to have the problem of time wasters on this, but at least they're trying to make it so that there's less of this whole like window shopping and more of this actual connecting. So I think that this is interesting. I think
it's interesting minus the kindness aspect. That's just bizarre to me.
Why is that bizarre to you?
You're being rated on your kindness. Well, like the fuck is that? Right? Like
it's a mean world. Facebook's trying to make it a little nicer, one date at a time. Which brings me to the next story that I want to talk about, and I don't even have it queued up. Let me see if I can find it here. I think it was on the Financial Times. So
are you gonna give me something to chew on here or what?
Okay. So there was a senator, and I'm trying to find the actual story. So okay, here it is. This is from.
Are you talking about Pelosi and her trades?
No. Why? There's one article you can find. It's on that law website. There's a senator who wants to ban dominant tech companies that have a $100 billion market cap or greater from doing M&A transactions. I think that's really interesting, a really fun rule. And I'm trying to find the actual article here.
I don't know why these senators waste time coming up with this shit. Like, all the problems in the world, and that's what you're focused on. There's people in the U.S. that don't even have clean drinking water, but you're focused on M&A from large tech. That's never going to get passed through because you live in a capitalist society, right? Like, waste of time.
But so why don't you like to me that's interesting because it's saying to the Facebooks and the Twitters of the world and the whatever app you're on, you gotta go out and slug it out and compete. You can't just squash who's around you. That could potentially be a competitor. I think it's kind of good. Like we're heading to this world where like Facebook, Amazon, all these big techs are just dominating everything. Why wouldn't it be a bad thing to say you're not allowed to do any more M&A?
Because you know how the law works. There's always loopholes. So what's going to happen? Well, it won't be Facebook, but it'll be a 49% owned joint venture that Facebook owns that stake in, and it's going to be acquired through some offshore subsidiary, and away you go.
Yeah, got it.
Right, like we know that they're going to just find the loopholes. So to me, it's almost like a why bother exercise.
Mm-hmm. Well, look, I think it's interesting because it put them in a position where they can't just take out the next Instagram. And remember, when Instagram was bought, here's the article. I finally found it. It was according to CNET. Let me pull it up. Apologies. Normally it doesn't take me this long to find an article. Okay, you guys can see this? Any yoga ads? Where's my yoga ads? Come on! U.S. Senator proposes banning acquisitions by big tech. Josh Hawley wants to ban companies with a market cap value of over $100 billion from acquiring or merging with other companies. U.S. Senator Josh Hawley, a staunch critic of big tech, unveiled an antitrust bill on Monday that would prohibit all mergers and acquisitions by companies with a market value greater than $100 billion, which include Apple, Amazon, Facebook, Google, and Microsoft. Hawley, a Republican from Missouri, referenced an alleged anti-conservative bias by large tech companies as he introduced his trust-busting for the 21st Century Act. Hawley is one of several Republican lawmakers who have alleged that Twitter, Facebook, and other social networks harbor anti-conservative bias. The social networks have denied. And look, I don't really love a lot of the super conservative friends I have and their political takes. I probably lean a little bit more on the left side on that. But there's definitely a bias where...
Yeah, I mean, I am far more conservative than you are, and that's fine. I understand that. You live in Toronto where it's all pixies and fairy dust and happiness.
And by the way, in my world, I'm like Rush Limbaugh.
I know you are. I know you are. But I mean, out here on the prairies, I mean, there's definitely a bias, like undoubtedly. And I mean, is it right? No, but at the same time, you just kind of learn to live with it, right? Like it is what it is. I mean, you've got the crazies on both sides, and it just seems that the one side of the crazy wins more often than the other, and that's what it is. I mean, you just learn where and what you can and cannot say, right? So I mean, it is what it is. I can certainly see the argument for it, but I don't think it's going to work. And the reason I say that is because a market value of $100 billion. Okay, then
they're specifically targeting Facebook, Google, Amazon, Microsoft.
Well, exactly, right?
And Coinbase is probably gonna be over $100 billion.
Yeah, so I mean, will it just cause certain firms to stay private for longer? Maybe, or things will be more supported by private equity rather than public. There's just so many ways around this already that I don't think it's going to work.
So basically what you're saying is you can, so don't try.
Kind of. In this instance, yeah. I mean, okay, it cannot be acquired by big tech with a market value beyond X. Okay, so then you know what happens. Facebook opens a subsidiary in the Cayman Islands, funnels money there, and then acquires through that. How far back are they going to go? How far are they going to trace the money? It's always going to happen, right?
Mm-hmm. Fair enough. I think that it's going to be a lot more challenging than that, because I think that if Facebook, Google, Amazon, etc. wanted to take out something like Instagram, everybody knew what Instagram was when Facebook paid. What was it, $4 or $5 billion that they paid for Facebook for Instagram? Facebook paid for Instagram.
I've got no idea. And I mean, let's face it, there's also going to be limits. They can't acquire anything for a price tag below 50 billion, or it'll end up being something like that, right?
Yeah. So apologies, it was 1 billion according to a very basic search, but still at the time, yeah. Look, and at the time, Instagram could have become its own little giant, and then you got a bunch of competing media entities, and it makes it a little bit more challenging to control narrative, right?
You know what I find interesting? What I find interesting is they're targeting tech, but they say no mention of the news media. The news media has been consolidated beyond belief over the last 50 years. The banking industry has been consolidated beyond belief over the last 50 years. But so why are you focused on tech? Why tech? Is it just because you don't have anyone in your corner?
It's because the narrative amongst politicians and the political media is that the Facebooks, the Twitters, the Googles have tremendous say over and influence over our lives because they can tell us what to think about. I mean, they can't really necessarily tell us what to think, but they can at least tell us what to think about. Which,
as opposed to news media, which does none of that whatsoever,
the
banking industry, which can either say yes, you can buy that, or no, you cannot.
It's different though, because I'm on my phone. They can actually push stuff to me. I could choose if I want to if I want to watch a news program, but like, unfortunately, and as much as it sucks, I actually have Facebook. I don't even want to have Facebook, but so many people communicate to me on Facebook that it's like I'm trapped. And then it's like, now they have all this shit on me. They have all this data and they can use it to manipulate me. And this stuff does happen. Like it does.
Oh, absolutely it does. But I mean, at the same time, your bank has the same information on you. Maybe not in the same context, but they know where you do all your purchasing and everything else. Yeah. I guess they aren't selling ads to you though.
And well, it's a much broader conversation, but I think that it's good to have small companies in this game that have a chance to grow and have a chance to for me as an investor, I find it more interesting. It's not that fun looking at just like Facebook, which has just turned into a conglomerate of all these different like companies I could have individually considered what I wanted to invest in. As an investor, I don't hate it. That's all that I'm saying.
Yeah, but as an investor, if you can invest in something at a 500 million valuation, it goes up to, call it 20 billion. Yeah, it's a long shot, but then Facebook wants to come and buy them for 40 billion, and you get 2x. What are you going to be most happiest about?
So I brought this point up to a friend the other day, and I don't consider you a friend, so I'm going to say I brought this point up to a colleague. But let's talk about Apple for a second, if I may be so bold as to talk about Apple.
You mean the company that has like as much money on their balance sheet as the U.S. government at this point?
Look at this. They've got 700, according to this.
That's not 700. That's 76.
Sorry, $76 billion of cash in short-term investments.
What did they do
on their balance sheet? Think about that.
But go back to that. That's interesting. What are they spending money on? Look at 2019, this December quarter, 107 billion. Where have they placed 20-30 billion dollars?
This is interesting. There's a lot of ways you can spend money, especially when you're in their business. Where this is, we'd have to do actual live on air
analysis. I get that. I'm just saying, like,
you can see
76 billion is a lot of fucking money. Don't get me wrong.
So
all I'm saying is where to go.
In terms of capital expenditure, they're spending around $8 to $7 billion a year. And I think that again, I'm getting angry at Y charts.
We can't see it, buddy.
Oh, sorry. I'm getting angry at Y charts here, but I don't even think. I think that they actually have even more than this in short-term investments currently. If I can pull up the actual balance sheet. But look, the bottom line I'm trying to get at here is that they've got a lot of cash. If anybody starts to have any traction with users and the experience, Apple's ability to just go and like take them out. Like, oh, what do you think you're worth? 50 million? Here's $500 million, 10 times more than you wanted. Done. And it does, in a way.
So let me clarify my position on this a bit. I fully understand where you're coming from, and it's not like I disagree on that. Where I disagree is solely on the premise of the government trying to stop anything, because to me, the government is so inefficient and they fail at so much that this is just going to be another instance of they'll just take the loophole, right? Like you think a company like Apple's not going to have the influence or the money and resources to find any loophole possible and fight in court till the end of time, right? Like I just don't see it as being realistic is really what it comes down to.
So let me pull this up. This is Apple's. This was what I was looking for, and I don't know why this didn't appear on Y charts. I'm getting kind of angry.
You've got 2019 up.
So this is 2019. Okay, this is June 2019. Let me try to get something a little bit more. This was the first thing that came up when I went on Google here. I hate the SEC website. I will do everything in my power to avoid going to their website. Do you have a copy of it, of their?
I'm just pulling it up here.
But we could kind of see there a lot of cash, a lot of marketable securities to the tune of 94 million, plus non-current of 160 million. That's in 2019. Like that's almost $200 billion in like what I consider cash. Not like that's 2019. If you want to navigate SEC's or Edgar,
I've got it here.
You got the link for me?
Yeah, 1 second.
Perfect, thank you. You're quick on Edgar. I'm such a Canadian, and like all I use is CEDAR.
I'll be honest. I have a hell of a time trying to find anything in here. No, it looks up to date. I mean, I'd expect Y charts to have someone actually manually go through and ensure everything is correct.
Okay, so let's take a look at this. $36 million in cash and cash equivalents, $40 million in marketable securities, and then look at this, $118 million of non-current marketable securities.
Click the. Is that a link? Where does it take you to?
It just breaks down the unit. So look, the point that I'm trying to get at here is like, think of how much cash that is, right? Like it's not that long ago that Apple was worth like a couple $100 billion. And now they've effectively got that in liquidity on their balance sheet.
How can they have such high accounts payable?
$63 billion in accounts payable. Look.
Sorry, what I'm getting at is look at cash and cash equivalents as well as marketable securities and look at accounts payable.
Yeah, it's because the production of semis and technology is not cheap. There was an article that came out on the weekend about one of the largest chip makers, and I reached out to a friend of ours who works at Barron's and covers this, and I said, I forget the name of the company because I don't follow the semi space that often, but talked about how there's going to be $200 billion investment over the next 5 years into their production. $200 billion.
Oh yeah, I'm just saying everyone talks about the cash position Apple has, but it's actually not that great when you compare it to current accounts payable.
Yeah.
Right.
Look, I agree. Let's move on here. Let's talk about the CPI number.
They were great this morning. There's no such thing as inflation, Steve.
So we're going to let me get up a little bit of a caption for you here. It's called CPI comes in hot. I'm going to pull up the actual source data. There's about 1 million articles you guys could read. But you guys come to SmallCapSteve Live for a reason, and that's because I'm going to bring you the source, baby. Look at this. From the Bureau of Labor Statistics.
You got to share your screen.
I need a
voice.
There we go. This is what the raw data looks like, baby. This is what the raw data looks like.
Man. It's kind of being blocked off by your SmallCapSteve logo in the top.
Well, that's the point. You guys come here to read my name. Can you see that?
Yeah, that works.
So you can see there the big number there to look at here. Let me zoom out just a little bit so we can see that. Okay,
gasoline. Now,
gasoline had a very big impact on this number. They came in a little bit higher than expected.
So I'm not even saying words right now. Let's go back 12 months. What happened 12 months ago? Well, we saw oil hit literal negative territory. I think it was like something. It went as low as like negative $30 or $40 per barrel. So of course we're going to see year over year increase in that. I mean, certainly in Canada right now I'm paying $1.27 a liter, and this time last year I was paying 60 cents a liter. So I mean I fully understand why that's high. I'd like to see like the number excluding Oil.
Yeah, you know what? If we wanted to do a fun exercise, and we're not going to do this on live on the air, but it's an exercise worth looking at, is I would look at the average price of used cars, because we're hearing a lot of stuff that used cars are a lot more expensive right now. I suppose that they did have that jump there, 5.3 in September.
Yeah, but they still had 9.4.
Yeah, 9.4 on an annual adjusted rate. Okay. What about shelter though? It's only up 1.7%. How much are you buying that number?
Well, I think you're misunderstanding how that figure's calculated, Steve. That's not based on the price of a house. That's based on rent.
Yeah. I never said what it was, so you're telling me that I misunderstood it. But
the way you presented it.
No, all I said is shelter. What do you think of that? So I know that I actually have.
Well, I figured you did.
No,
So genuine question for you: has your rent gone up since this time last year?
That's this is a good question. In places like the suburbs, from my understanding of the news media I follow, the answer is. In the suburbs, it has gone up substantially. In the city, it's actually gone down a little bit. This is like, and look, I'm talking like what really passes the smell test. I was actually trying to get a sense of how much real estate over the last year has gone up in the U.S. because it's foolish to not when you're really thinking about inflation. It's foolish to not actually think about real estate prices, even though that's not included in this. I have the official document where they break down what shelter is. Just to be clear that I did understand it.
I know. I have to bug you. That's all.
I probably spent 20 minutes trying to understand it and just got distracted. But it's interesting to look at this. I just don't know if real estate keeps going up, how you can expect shelter to stay at 1.7%. Perhaps that's going to be a lagging component of CPI.
Well, you know how? Because there's so many jurisdictions where rent is controlled. You're limited by the percent increase you can have each year, right? Cities like LA and New York, they say you can only increase X amount per year. So it's not a realistic representation of
but
free market.
To be fair, there's always loopholes, and like we have that in Toronto, and
I'm pretty sure in Saskatchewan you can only increase.
And there's ways to get around that. Like you say you're moving in, or you sell the house, and then there's new buyers coming, so you got to get out. It's not a perfect it does, and then like there's weird loopholes that landlords will usually try to get around it and hope that people will accept it. I don't see shelter staying at 1.7 regardless.
No, I don't either. Largely what I was getting at by that comment is that's why shelter might not be as high as you think. If you want to pull that back up, I think outside of used cars, I think one other interesting tidbit would be electricity, because the cost of electricity is rather consistent, right? And I mean, an increase of 2.5% is certainly interesting. I mean, the pipe gas service, that'll be impacted by what went down last year in relation to any type of energy, really. But electricity is certainly interesting.
We look, we're just a couple of guys chatting about this without having done a real deep dive into the numbers. But I would have to presume that Texas factors into that, which makes up about 10% of the American population.
Was that in March that happened, though?
Yeah, I think it was sort of that. Actually, I don't know exactly when all the Texas. I'm sure that they're still dealing with it, right? You have a bunch of the grid.
Yeah, that's fair. That's fair.
And we can
food though. Food's another one that would be interesting. 3.5, 3.3, 3.7.
Yeah,
that's interesting to me. But I mean, overall, the 2.6 is certainly skewed as a result of energy.
So the bigger point to kind of think about here as we just sort of look at these numbers and babble is that this is what the Fed's going to use to try to focus on their mandate, which is inflation around 2%. They're telling us we're okay. It's going to get hot, but it's transitory.
So the one thing I want to get at is on 60 Minutes, did Jay Powell not say that once they see things over 2%, they're going to consider raising rates again?
No, he didn't say that.
I'm almost certain he said that.
Maybe over the long term, but no. Well, look, we won't play it live on air, but tomorrow I will follow up with that. But my understanding is that they want inflation to come in, and he said that he doesn't see. He said he sees inflation going up, probably higher than people expect, and he has no intentions of raising rates for the next year.
Interesting. That's good because I got to do a refi.
But look, we will see. I haven't covered anything that you've covered at the deep dive today. Is there any stories that you want to get into?
Oh, sustained rate of 2%. Thank you, JTD.
Yeah. JTD!
I knew he had said something about it. In terms of small caps, Organigram put out earnings this morning. Absolutely pitiful. Fourth straight quarter of gross losses. I don't know how that company is still in operation, and yet they've managed to convince British American Tobacco to take a 20% stake for $221 million last month.
Let me pull up your article here, Jason. You put a lot of time in it.
I mean, I don't want to spend a lot of time on it, truth be told, just because the earnings were piss poor, following a Freya's piss poor earnings. Young Justin this morning actually said to me that word on the street is that Aurora is going to have absolute shit earnings as well.
Oh, whoa.
Thought.
Back up. You're saying that Aurora is going to put out bad earnings? Aurora Cannabis?
Who would have thought, right? Who would have thought? Anyways, Organigram, 14.6 in net revenues, loss of 66.4 million. A lot of that loss was related to warrant liabilities again. However, doesn't really change things overall. They failed to meet any sense of consensus estimates on this. Just a disaster of a quarter. It's really what it is.
Do you mind if I pull up the financials here, Jason? Is that okay with you? Okay. Let's take a look.
Bucket ready?
What's that?
You got a puke bucket ready?
I don't, but I'm. Oh wow! Look at that top line. Down 8 million. Gross margins. Oh, negative gross margins. That's good.
Yep.
Loss before. Is this just a quarter? This is just the quarter. Back. Is that back to back? Yeah, that is back to back negative gross margin quarters.
Sorry. You're comparing to. You're comparing to February 29, 2020 there, not the prior quarter. I believe this is the fourth straight quarter of negative gross margins.
Normally they go left to right, don't they?
Well, they got the 3 months ended and then the 6 months ended, and they provided.
No. So 17 million negative gross margin, and then negative 33 million on the 6 months.
Yeah, this is the fourth straight quarter.
It's the fourth straight. So you're saying the 2 quarters before that they were doing negative gross margin.
This is the fourth quarter in a row that they have posted.
Holy moly! Look at that. I'm going to sell you cannabis, but guess what? I'm going to pay for your cannabis as well. Oh my goodness!
I believe they actually break down.
These are some
cash flow statement for the quarter as well, which you'll like to see.
This makes me feel so much better about some of the companies I support on a small cap basis that I get frustrated with when I see like a company that got to Organigram size, had all that institutional backing, and like, I look at this here and it's like, okay, we're well into full rec. $10 million in operating cash flow loss last quarter. Did they break it down? Yes, they gave us a 3 months. We don't always get the cash flow statement quarterly. They did it for us. Thank you guys. Looks like they must have had a slightly positive or just about break even operating cash flow quarter before that. How's the balance sheet look, Jason?
Balance sheet went down overall.
Lots of cash, but lots of long-term debt.
Current liabilities were about 200 in the prior quarter. Current assets was about 200 million in the prior quarter. Current liabilities is at 19 million. So it's healthy in that respect, actually. Long-term debt, that 52 million has actually been paid off. But
that's the subsequent events, I take it?
Yes, and I'm 95 to 99% certain that it's paid off because BMO called it. Because basically what would have happened is Organigram would have called BMO and said, hey guys, we're going to need a waiver on our covenants again. And BMO probably just said, fuck off. You're paying it back. Because this was would have been the third or fourth quarter in a row where they needed adjustments, as in they are getting nowhere with their operation, and BMO said, no, we aren't providing you with this money anymore.
Okay, but they also received a giant, also above that, they received a giant strategic investment from BAT, which is a tobacco company, I believe.
Yeah. British American Tobacco.
British American Tobacco. So BMO got lucky. You got, because they weren't going to service that debt.
Well, they had $60 million in cash. They had $61 million in cash as of this quarter end. So, but I mean, by April, it would have been gone to a large extent.
Yeah.
However,
they weren't going to service it.
There was $30 million in short-term investments as a result, related to the requirements for that. So, I mean, BMO got lucky; they got their money back.
How do you give a massive amount of debt to a company that generates negative cash flow? I just don't.
Well, that's what I mean. BMO was probably this is the fourth quarter in a row, guys. Get lost.
Okay. Well, look, Jason. I mean, we've covered enough of this the Canadian cannabis stuff. Yeah, this Organigram. Anything interesting happening at the Dive today? What do you guys have coming out?
Excuse me.
Oh, this is riveting television.
Riveting television, keeping me awake. We have a special article on Coinbase coming out in place of the Daily Dive this afternoon in half an hour's time. Outside of that, I believe we actually had some content go out while we were live related to CPI. Hermina wrote that up for us this afternoon. I don't think I got anything scheduled yet because my mornings have become very, very hectic with training and everything else. So we'll see what the day brings. I'd like to get a market movers piece out on something or other. It's been a while since I've been able to actually write a nice story. So hopefully I get to do something along those lines. Other than that, let's keep at it.
Okay. Well, look, 1 second here. A quick little disclaimer here, folks. Nothing that we talk about on this show is designed to be what do we call it? Financial advice. If you're looking for that sort of thing, go find somebody who's licensed, of which I am not, nor is Jay. This is for informational and entertainment purposes only. If you're looking for that sort of thing, again, don't come to us. Don't sue us. We're just having fun here. Look, guys, you could have spent your last hour sitting at any screen, any place in the world, but you chose to spend it with us. For that, I am grateful, and I thank you. We will be back tomorrow at noon. So thank you for joining us. Oh, by the way, I'm also doing a 2 p.m. show today with new issuer. We got Adam Burke on the show tomorrow from STEM Holdings. That's going to be a fun one.
What are you doing this afternoon? I didn't even know about it.
Ayurcan, a new Canadian cannabis listed company.
Well,
you're gonna hop on with me?
I didn't know you were doing that. We'll see. I gotta get some stuff scheduled, and like I said, I want to get some long-form content out.
All right. Well, everybody, thank you for joining us, and we'll be back at 2 p.m. But back with the full show tomorrow at noon. Thank you, everybody.
I got big dog status, I'm a big dog,